Mad markets, 8 interest rate rises out there, the bond market, Vocus as a stock, and also the banks. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. All right, Paul, I'm mad about the markets. Like Friday, we're big sell-off. I thought was stupid. But then we come back on Tuesday and we buy big time. What's going on?
Yeah, very hard to call, Peter. I think I'm probably a bit on the outer here, but I think what we have definitely found now is a bottom of the trading range, 5, 6, 7, 5-ish. Sort of it's now bounced 3 times off that level. Yeah. But it can't get through 6,000. So I guess that until we see company earnings data in August, we're going to sort of be range bound. Yeah. Obviously, you know, I think what else has happened in the last month or so is better growth figures globally in terms of, you know, the data coming out of Europe is more positive.
The trucks on the road in Italy scared the pants off me.
And so, you know, markets offshore are cracking new highs. So while that happens, it's very hard for us to sell off, and we're probably going to edge up a little bit.
Yeah, and we're waiting for some really good news. We were waiting for Trump and his tax plan. It seems that the market thinks he won't get it up this year, but it still keeps going up, which is a good sign.
Well, if they underline, forget the tax plan, if the economy is getting stronger in the US and Europe, that's got to be good for companies. They're expecting earnings, they're revising their forecast for earnings this quarter up, so that's a positive.
Okay, so therefore when the market sells off stupidly, it's probably a buying opportunity.
Yeah, I still struggle to see value. I think a bit of caution is still required, but it's certainly a market. If you're long and comfortable, just stay with it. And I think you just have to sort of take a bit of a, you know, I won't say get out of the market, but just watch this sort of period and just hang around a little bit.
Okay, one thing I'm mad about is my old mate John Edwards, who was an advisor to Paul Keating, a smart economist, comes out and says 8 interest rate rises possible in 2 years. I don't think so.
No, I know you don't, and I think the RBA sort of scotched that a bit yesterday. But
go to the RBA.
I think people should be very carefully watching the bond market in the US, and you're seeing what's happening in our bond market locally. Look, interest rates globally are moving up. You know, we've got the US, we've got the UK later this year, we've got Canada about to follow suit, allegedly. And we've got the bond market just showing a few nerves again in the US on the back of better growth figures, right? Better economic data.
Yeah, I know you're actually right in what you're saying, but 3 or 4 months ago, the bond market was going in a different direction. So, and you always tell me the bond market's right, but it's right until it's wrong, and then it's right again until it's wrong.
It's right till it's wrong, but the implications for our market are twofold. One is the interest rate defences are going to be underperformed, and we've already seen that. We've seen property trusts under pressure. We've had Sydney Airport, we've had the Transurbans pull back. Now remember back in November last year when the US bonds went through 2.5%, things like Transurban went below $10, Sydney Airport went below, had a big figure 5 in front of it, right? And we're starting to see that sort of pressure. Meanwhile, the so-called growth stocks, the cyclicals like the resources and the banks which benefit are what's taking the market higher. So just keep your eye on the bond market. I think it's really important.
I don't want you to scare the pants off our viewers. Do you think there are 8 rate rises in 2 years coming up?
No, I don't, but I think the next move of interest rates here will be up.
Yeah,
and it'll come a little bit sooner. But the Reserve Bank yesterday is sort of squashing all that stuff.
And I've written a brilliant article on this today on switzer.com.au where I call a whole load of BS, all right?
Okay, I just say watch the bond market for clues and look at what happened in November last year. It's actually good for markets, right?
Yeah.
The bond market going up
it's a positive thing.
Is a positive, right? Yeah. But just watch that carefully and watch the impact and some of the rotation occurring in our market.
Okay, the brilliant point I made was if we do see 8 interest rate rises, it'd be because the Australian economy is doing so well and wages will be rising, so a lot of those rate rises will be covered by higher wages. Anyway, next thing, Vocus. You want to talk about Vocus as a stock?
This morning's come out with basically saying you had to grant due diligence rights to KKR. So look, I think that's probably in some ways, a recognition by Vocus there's not a higher bidder around the corner. But secondly, that maybe the takeover offer of 350 will get the go-ahead at some stage. So it's a bit of I won't say it's capitulation, but probably for Vocus shareholders, probably who've been hanging out waiting for a whole lot of other bidders, they aren't there at the moment. So
well, Fairfax learnt that. You can't hang on too long.
Fairfax learnt that. So look, I suppose it's a short-term positive for the price today, but it also means getting above 350 is going to be pretty challenging.
Paul, one last thing, bank share prices, are they going down or are they going up?
Well, I think in your program, Christopher Joy made a good point. We've still got this thing with APRA to come out around capital. Market's not expecting more dilutive capital raisings, but I think Christopher Joy sort of says that's not to be ruled out.
No.
So I think with banks around, CommBank around $84, getting back up towards their recent highs, maybe just a little time to...
You would wait.
Just be a little bit cautious, because if we do see APRA come and surprise the market and say, look, hang on, this is what we mean by unquestionably strong, and by the way, you won't get their banks just by through raising capital through DRPs and selling assets. You're actually going to have to do some sort of capital raising. Yeah, the bank shares will be down 15%. So
yeah, but Paul, that's when I'd be a buyer of the banks, because particularly if you believe the interest rate scenario, as interest rates go up, bank profits go up. So it'd be a perfect time to buy banks if that should happen.
Yeah, so I think at these levels, a bit of caution required. Yeah. I think I wouldn't...
keep your money in your pocket.
Keep your money in your pocket a little bit.
Okay. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.